Hello friends, welcome back to this new exciting video. Do you know that you can earn a monthly rental income from the stocks that you own and the cash that you have? It is definitely possible using the option wheel strategy. I'm Govin from optionwriting.in. I have been practicing this strategy and earning a very good monthly rental income. This strategy is a low risk guaranteed return strategy. To understand this strategy, you need to know about two other strategies, that is covered call and the cash secured put. If you are not aware, no need to worry. There are two separate videos available. You can go and watch them. The links for those videos are given in the description below. For now, I assume that you are aware of these two strategies, and without wasting time, let us jump into the understanding of the strategy itself. Option wheel strategy is the strategy that rotates or switches between the cash secured put and the covered call. So the question now is, where do we start? Do we start with the cash secured put or the covered call? It depends on the individual preference based on their technical view such as support, resistance, pivots and trends, etc. Personally, I prefer to acquire the stock at the price at which I am comfortable to hold for a longer period. So that means I start with the cash secured put. For the sake of understanding of the strategy, let us assume that we start with the cash secured put. So once you decide that you want to acquire the stock at a particular price, you go ahead and sell the put option. As long as the sold put option goes out of the money, you continue to keep the premium month on month. The time when it goes in the money, so you will have to receive the stock and also keep the premium. So remember that you need to have a cash equivalent to one lot of the stock that you want to receive. Now that you have acquired the stock, you can go ahead and initiate the covered call. So you go ahead and sell the call option. So as long as the sold call option stays out of the money, you continue to keep the premium month on month and continue to hold the stock in your account. The time when it goes in the money, you will have to deliver the stocks and keep the premium that you have received from the sold call option. Now that you have delivered the stock, you can go ahead and initiate the cash secured put again. So this thing will continue in a fashion switching between the cash secured put and the covered call, and in all the cases you continue to keep these premiums that you have received. This is what is the option wheel strategy is about. So we will look into the example now. Let me take Reliance as an example. Let us assume that it is trading above 2100. The current lot size of Reliance is 250, and we want to start with the cash secured put, by which we want to acquire Reliance stock at 2100 price. So that means we have to go and sell the put option of Reliance at 2100, and let us assume that we collect the premium of 7500. As long as Reliance expires above 2100, the sold put option stays out of the money and you continue to keep the premium that you have received. The month at which Reliance expires below 2100, so that means the sold put option now is in the money. So you should be ready to take a delivery of one lot quantity of Reliance, that is 250, by paying 5,25,000 rupees. Remember, you need to have this much of amount available in your account, and the collected premium is your profit. So that means the effective acquisition price of Reliance has come down to 2070. After receiving 250 quantity of Reliance to your demat account, now you can go and comfortably initiate the covered call. So that means you have to go and sell the call option of Reliance at 2100 strike price. And in this case also, let us assume we collect the premium of 7500 rupees. Now, as long as Reliance expires below 2100, you continue to keep the collected premium. The month at which Reliance expires above 2100, the sold call option will be in the money, and you need to be ready to deliver a one lot quantity of Reliance stock. And in this case also, you can keep the premium of 7500 that you have received. So now that the Reliance stocks goes out of your demat account, you don't own any of the Reliance stock. Now, based on what price Reliance is trading, based on your technical view, you can again initiate the cash secured put to acquire the Reliance stocks. This is how you can switch between cash secured put and covered call and continue to collect the premium in all the cases. So this is how the option wheel strategy works. Based on your capital, this strategy can be done with multiple stocks. So one stock you can initiate cash secured put. If you have already acquired one stock, you can initiate with a covered call. It all depends on the amount of capital you have. Moving on to the advantages of the option wheel strategy, the collected premium from both cash secured put and the covered call is a guaranteed return every expiry or every month. This is how you generate a guaranteed monthly rental income from this option wheel strategy. It is the lowest risk, or even I would say no risk strategy, because the both cash secured put and the covered call are so. The only possible low risk is when the asset falls below your acquisition price. At that time, the premiums that are available are very low and your monthly rental will reduce, sometimes even drastically. And it does not require any active monitoring. Once you study the stock and the technical view, you take the position, you don't have to monitor every day. And it is possible to generate higher returns by choosing the right stocks based on your technical and fundamental view, taking the right positions and right strikes. And also you can do some tailored cash secured put and covered calls such as ratios, straddles, etc. And you can also do some adjustments based on the stock movement. Moving on to the requirements and pitfalls of the option wheel strategy. The capital required to do this strategy is somewhere between 5 to 10 lakh, which is based on the stocks that you choose to do this strategy. As I mentioned, the returns are less when the stock is trading below your acquisition price because the premiums are low. So you may get a very low monthly income based on the stock price at which it is trading. And it needs the right selection of stocks based on the technical and fundamental view, and also it is based on your capital, and you need to ensure that there is a good liquidity that is available in the stock options. And this strategy is not for the long-term investors who would like to buy and forget these stocks for a longer period for the multi-bagger kind of a returns. A quick summary of the option wheel strategy. We have seen that it is a monthly guaranteed return strategy, and the only risk associated with this strategy is when the asset is trading below the acquisition price. That is when your monthly rental will go down, and it is the best strategy suited for the people with capital of 5 to 10 lakhs. And people with more capital can select a set of stocks to do this strategy to generate a better monthly returns. And it is definitely best suited for the professional who have less time to trade, and also for the part-time traders and the investors as well. Friends, I hope you got an idea of what the option wheel strategy is all about. If you have any suggestions or queries, please leave your comments in the comment section. Do subscribe to this channel and share this video with your friends. I plan to share my option wheel strategy positions in my upcoming videos. Do press the bell icon so that you will get a notification when I release a new video. Thank you for watching. Stay tuned. See you soon.